Hi there, it's Mark Sebastian, founder of OptionPit.com, and this is the Vol Report. Reminder, this is for education purposes only. Shouldn't be considered investment advice. Options have a risk. Boy, I'm not one to say I called it, but yesterday I was saying, it looks like we're going to go green. And did we ever? What an up day. We exploded higher. We exploded higher. One second. Let me boo this Phil. Yeah, we exploded higher, and we still look really strong. Now, we're at kind of a key level. Let me pull up a chart of SPX. We're starting to make a run right at that 200-day moving average. The 200-day moving average is 27.21. We crack that, we might be off to the races. If we don't, we could go right back down. And I wouldn't be shocked either way. I really wouldn't. But they're taking vol down. I think markets have decided that they're tired of being afraid of volatility, and they are just kind of things look like they're running, and we could drop and we could move around. But Apple's up big. AMAT is up big. Everything is out. Apple is up huge. That talk about hedge funds buying back in. We had money come off the table, and money is way back in. In our chat room, we did a 67, 75, 82.5 butterfly expiring on the 9th. It's doing really well. It moved a little quicker than I was thinking, so I may be taking that off today. In fact, most of the stuff in our chat room is working out pretty well, so we will be taking a lot of profits today. VIX looks like, if you look at VIX term structure, it's still backward. VIX is over the cash index. VIX futures are under the cash index, but the standard term structure, March, April, May, June, July, is completely flat, with March now slightly under April. And April slightly under May. So things are starting to look like they are going to normalize. Doesn't mean we're definitely going to, but they're starting to look like it, which is a pretty good thing. That's kind of the stuff you'll want if we're going to recover. Bonds still look like they've got a rough go of it, but they've recovered. They stopped tanking. This is TLT, a long-term bond portfolio. And take a look at the 2-day chart. Talk about a wicked move. But the fact that bonds are stabilizing means that, maybe that inflation data, we're kind of over it. XLE is a name that we've been watching. It's been so weak, so soft. Now, it did get a rally yesterday, but if you look at it on a 5-day chart, it has not really participated like the rest of the market. And why? ExxonMobil's been soft. CVX has been soft. All these big oil names, despite the rally in oil, look terrible. And then a name that we're going to continue to look at is SIBO, which got beaten on really cruddy news and is now starting to rally. And I like it to keep going. And that is kind of all of the different pieces I'm watching today, folks. I think this could be, if we break 2720, which we will bump into, we could be really off to the races in the S&P. That's my best gut feeling. All right, folks, have a great morning, and I'll talk to you soon.